I've got two stocks today. The highlight is they're extremely speculative, which maybe, it's not the right time to be doing, as we talked about at the beginning with the market. But I'll talk about why these opportunities I think are specific to right now, that maybe if you wait on them for too long, you're going to miss out on some catalysts that are important. So let's start with optics, Austin. It's a space we've recommended a variety of stocks in. I'm not going to rehash the industry. We do have a complete episode if anyone wants to go back or you're new to the show. March 28th, we brought an expert on to talk about optics, but the short of what they are is they're all about the transmission of data. AI has grown data exponentially, as we've all talked about many times in the show. This is a massive boom for optics. They're more expensive, but they enable kind of data to travel over longer distances and have a number of other advantages. So we've recommended.
I'm not technically informed on data center building here, but don't they also allow greater utilization of your chips? Because when you have in sync data transfer and training, you don't sort of waste that run, because if you have chips that are not in sync, you can sort of waste a whole cycle of training.
Yeah, we could go and one of the problems is if you're working on coherency, there's just a lot of limits to copper and distance. And while it's more effective, it's going to limit, as you're saying, if you want to connect a lot of clusters together, you're not going to be able to do that. You're going to need to go to optics. So that's kind of where you get towards these large sets and a need for optics. But regardless, we've recommended three stocks. We've got Coherent, Fabrinet, I should say, and Lumentum. If you're buying one of these stocks, if you're new to this, the one that I've liked the best in the past is Fabrinet, in the sense it's more akin to being the Taiwan semiconductor of optics. They work on designs, so they're going to be a little bit more resistant to some industry changes that could hurt some of these other companies more. Now, as I mentioned earlier, it should go without saying that this is an industry where every single time the projections for data center spending go up and up and up, it's good for optics. Even with the recent post-earnings hiccup for Coherent, it's up 81% since early April. Lumentum's up 130%. Fabrinet's up 91%. Yet, the smallest and most speculative of these domestic options plays, Applied Optoelectronics, that's ticker AAOI, is down 37% year to date. So they've been lagging, and a lot of that lagging's come kind of in recent months. Now, they're projected to see sales growth of 67% next year. That might prove conservative. And a big reason why is Amazon, they took grants in the company, and they're highly incentivized to buy their products. Microsoft has a deal with them as well. So between those two, you've already got access to about 50% of hyperscale spending. And what Applied Optoelectronics is aiming for is an 8.5x boost in demand for products that are about to go on a huge acceleration curve, which is 800G and 1.6T. And again, that's just basically talking about speed, bandwidth. So they also have a domestic supply story. And Austin, if you've been watching the news, you know how important that can be. So we talked about Marvell last week. This is kind of a similar story where the market is just betting that this company is not going to execute. That's not unfounded. This is a company that is smaller. They don't have the same engineering talent as their rivals, but their upside is substantial. So, Austin, the stock, they're trading down 25% since June 20th. Fabrinet's up 25%. We like the risk reward of this situation. What we're going to do is we're going to add $5,000. This is a stock. You need to go into it with eyes wide open. There is downside of 50% or more, but we do see significant upside if this company is able to deliver on this significant acceleration ramp that the market is currently not giving them much in the way of credit for. So that's our first buy. I'll stop here if you have any questions. Otherwise, we can move on to the second buy.
No, just to reiterate what you said again and again, a word of caution. These next two positions are going to be some of the most speculative and volatile in the portfolio, high upside potential, but size your position accordingly. We ultimately you run a portfolio for the reason that no one position, right, should dictate your financial outcomes. So size your positions here accordingly.
Okay, great. And the second stock we're talking about, which is the smallest stock we've not only bought but likely talked about on this show by far, is Tecogen. And last week, we discussed more on kind of a power bottleneck situation that's emerging as going to be, for the protracted future, one of the biggest stories in the AI space. We know that a lot more compute has to come online, but we have a situation in the US where we haven't really added much to energy since the mid 1970s, and that's going to require utilities investing in a way that they haven't before. It's going to require new approvals, and it's going to require new parts of the value chain. So when we explored this trend initially on the podcast last fall, we had recommended Vertiv and Schneider Electric. I continue to think both those stocks, they're good additions today. They both offer services that are just seeing wild demands gain, which is kind of this expertise in building data center components beyond just the chips. You know, we're talking power generation, the backup systems, cooling products. Specifically, cooling is very interesting because we've talked about this ongoing growth of Blackwell. And Austin, not just Blackwell, but every subsequent chip behind it, the cooling needs are growing by substantial margins. So we have cooling going from something that's effectively a very niche part of data center spending to one of the core contributors of data center spending, and it's all beginning to happen right now. So it caught my eye when Vertiv signed a deal with a very small company named Tecogen back in March to offer chillers. And what chillers do is they allow a company to shift cooling load off the grid and onto a gas engine. Basically, when the grid is tight, this is one way to save on power. It's extremely attractive for the very unique situation we find ourselves in today. And the stat Tecogen is used is that cooling for Blackwell chips, which again is just beginning to happen, can be 25 to 35% of a data center's total power. So while Vertiv handles the actual liquid cooling inside a data center, the heat that's dissipated goes towards one of these chillers. Now, Vertiv, they're a huge company. They've got plenty of agreements. So one area I was watching for this week was Tecogen reported earnings. And I wanted to see if there's actual progress because it's a great story. But is there actual momentum happening? And what they say is they've signed an agreement with a 100 megawatt data center for chillers that starts late in the year. And they've also been asked to provide quotes for 2 projects that are 60 to 100 chillers each. These deals could still not happen, but there's a very good chance that if they do go through, they provide a massive revenue acceleration in 2026. So Austin, people saw this news on their earnings call, and it was up 30% after. And where did it close the next day? Closed down 2%. And as we record this, it's down 4 to 5%. So that got me interested. I had been exploring the stock, wondering if it was something that, even though it was this small and speculative, if it was something we wanted to add. And after I saw that kind of momentum and the price reaction where a lot of people kind of sold the news, so to say, I said, let's start a starter position in this stock. So it's a $250 million market cap. This is several fold smaller than anything we've discussed, let alone bought. We're going to just limit to 2,500, I should say, to start. And I want to do that partially to really signal to people this is something I don't want anyone getting ahead of their skis on because it has huge potential. I've talked about the market fit here is great. It's not without competition, but again, they've got the deal with Vertiv, the ability to offload power, the growth in liquid cooling, all is a really powerful accelerant that almost has nothing in the back and everything ahead of it. So I like this story. What I want to do, Austin, I want to do 2 things. We're going to make this purchase. I also want to do a little bit more of a kind of deeper dive into the company. I don't want to promise anything, but we might have some areas in development where we're going to be able to kind of follow this story a little bit more and look for kind of these emerging data center investments in some areas beyond the chips that goes beyond Tecogen. So Austin, I think, that's it. It's 2 stocks, small, speculative, but also pretty interesting. And hopefully, people listening, this is something I can't imagine many people have ever heard of these stocks watching the show today.